Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Tomorrow we get the non-farm payroll report, and as has been the case recently, there are a lot of mixed expectations, and I feel like there are a lot of people thinking we could be in for kind of a more volatile session tomorrow. But what's interesting, and I guess what I wanted to highlight in this video, is that the option market not really expecting that big of a move. And I don't know if you've been following or if you were paying attention, but we have had some bigger swings on the earnings on the jobs report days um, over like the last two. So we basically had the June report, so here, was a significant surprise, and it led to an almost 10-point pop in the SPY. Then actually, even in July, wasn't as big of a surprise, or really wasn't much of a surprise, but we still had a really significant move. It was almost about five points on the SPY. So now we have just been kind of grinding higher. Several like lower volume, lower intraday volatility trading ranges over like the last week. You can see like the volume is really kind of dried up, and I'm just wondering if like the lower volatility, the lower volume, if that is kind of suppressing the option prices, because right now they're only pricing in about 275 for tomorrow's jobs report, and I guess some of that maybe comes down to expectations or a little bit maybe more solid. People aren't expecting as much of a surprise. But at the same time, we have had some really big swings the last few months off of these. And if there is a surprise, 275 really doesn't seem like a lot in the context of what the last few jobs reports. I mean, I'm not even going back to like May or even April too. So it doesn't seem like they're pricing in. It seems like the implied move is low, and maybe that'll end up being the case if it really is just kind of in line with expectations. But I mean, you can see from the chart, like the spiders are creeping back up into the high, and we're not too far away from it. And we have had some real big reactions to these jobs reports the last couple months. So to me, it seems to be like an interesting setup. I don't trade I don't trade the SPY or the Q on the long side with options very often. I usually look at them more as like hedging instruments. But sometimes, I think I did a video last jobs report day, kind of talking about the same idea that occasionally you get these setups where you get interesting option pricing, like interesting technicals, and maybe like a key catalyst, or like a jobs report or a Fed day or something like that, right? And they do set up, or they can set up interesting for maybe even like a long trade or like a strangle or a straddle, something like that. So this is something again, I don't trade these very often, and it really, I feel like you got to be specific with when you're going after it. But right now, as we head into the jobs report tomorrow, I think like the overall lower level of volatility the last few days has sucked a lot of the premium out of these contracts, and setting up, it's going into a potentially bigger catalyst with kind of an interesting setup from an option pricing perspective, because they're really not expecting a very big move, and that could create some opportunity. All right. So if you like this video and you're looking for more option trade ideas, or more option swing trade ideas, or even just options education, please follow up with the link in the description of the video for more information on options and play. Hope you guys have a great night. Stay well, and I will talk to you all tomorrow.